Hello again, everyone. This is Joe Hentges with Beyond the Chart. And in this technical analysis of the stock market video, I want to make 3 key points about the market. So stay tuned. All right, we're going to start off here with the S&P 500. And the bearish scenario, that is point number 1. The bearish scenario is still in place. It is not invalidated. We still have an intermediate wave 1 and an A, B, C intermediate wave 2. And we're starting an intermediate wave 3 down. Now, that will come more into question if we break this high of 2111, which we have struggled to do, at least as of yet. In this last week, we couldn't do it. And if it does break this high, it just weakens the position. It doesn't really take this out because an A, B, C, a C can continue to push beyond the high of A without a doubt. And the only time this whole wave structure pattern is invalidated is if we push to new highs, which is 2134. So we push above 2134, then the bearish scenario goes out the window. And this is the picture on the weekly chart. You can see that this week was not a very strong looking week at all. It's just a tight little, let me blow that up a little bit, tight little doji candle in here. And, you know, that's not, it could just be a pause, but it's not a very strong bullish activity. Let's take a look at the Russell 2000. Now the Russell 2000 has pushed above this high here, still has not taken out this high over here in December. So I continue, here's the all-time high up here. So we continue to count a alternate wave, a intermediate wave 1, intermediate wave 2, and a minor wave 1 down and a minor wave 2 back. And we continue to have lower lows, lower highs. This has not taken this out yet. So that's the scenario on the Russell 2000. Yeah, it was a little bit stronger than the others this week. Let's take a look at it on a weekly chart. You can see most of the other indices were kind of weak this week, but this one continued to push a little bit more. But, you know, this is still the count. I don't really have an alternate count for this at this point. This is continues to reinforce the bearish scenario. Okay, now point number 2 is that the market is continuing to be overbought, and it's just over the last week continued to push a little bit higher and got a little bit more overbought. Anything over 0, actually I like to think of on the McClellan oscillator, I like to think of plus or minus 50 as kind of a neutral zone. You get above this, you're up in the overbought. You get above 150 and you're in the severely overbought, okay? Now, what's the interesting point about this is that we actually are above at a 91 reading. We are above where the whole August collapse occurred with an 83 reading, okay? So here's where you were in August when the huge collapse occurred. So, you know, you don't have to be up here to get a collapse. I mean, we are overbought on the market. So we'll just, you know, you have to kind of take that. It's just a little flag going up. You have to take that in consideration. All right, let's take a look at the, start off with the semiconductors, if I could find them. There we go. The semiconductors continue to push high. Very strong 2-week move in here. This is a daily chart of SMH. Continue to look very, very strong. Don't really have a wave count I feel really good about in here. Here's the all-time high up here. Well, actually, it's not the all-time high, but it's the post financial crisis high, I believe. And we haven't taken that out yet. So I mean, we continue to push up. It looks bullish, but we haven't taken that out. So you know, these 3. What I call key ETF, economic ETFs, because the semiconductors are so key to like productivity and in manufacturing, in the technology industry, that type of thing. The home builders, which we'll look at next, the home building economy and everything related to home building is so key to the economy. Here's the high up here on XHB. And again, this hasn't even pushed to take this point out here, the April high. So we're continuing to lag down here. We didn't do much of anything this week, just kind of a sideways consolidation. So, you know, this continues to show lower lows and lower highs. And then, of course, the financial industry is another leading sector, with the banks and financial related institutions, key leading indicator of the economy. And you can see the high back up here in July 22nd, I believe. And, we've got a really strong, this was that August collapse. And we've come back and we're bouncing back, but we're kind of zigzagging down. And these two highs right in here, we're getting divergence on the indicators. So when you look at this, the RSI is getting bearish divergence on this last move. The demand index is showing bearish divergence. And then DI plus, DI minus, the blues, DI plus, the buying strength in there, and that is showing divergence. So all three indicators are not confirming this last push up. And then on Friday, we get this break and all the banks, collapse, not really collapse, but they sold off pretty hard on Friday because of the whole jobs report and the impact on the interest rate expectations, and that everybody's thinking that the Fed's not going to be able to raise in June. So right now, what I want to do, that's the third point I wanted to make. And then what I want to do is zoom in on the financials, and let's take a look at three big banks. Let's start off with Bank of America. This scenario really does look a lot like the XLF, although it didn't push to a new high like the XLF did here. But the wave count, to me, this is the highest point since like 2010. It is not an all-time high. It is not a post financial crisis high by any means, but it is a high point since like 2010. And I'm counting a wave 1, 2, and then a wave 1, 2 within this. I think it's because we've had overlap here. So fairly significant overlap is something I really couldn't ignore. So that told me that this is probably a 1-2 within a third intermediate wave getting ready to work its way down. We did break this trend line just slightly in here on this big gap down. You can see it closed at 1494 and then had a low of 14.19 and closed 14.42. So it looks like it's starting it and starting the move down and breaking that trend line. We're going to see what kind of follow through we get Monday, Tuesday. The next one is Citigroup. Citigroup's a similar type scenario. You can see this little push did not take out this high, but it's the same kind of setup that's going on, and this is a post-crisis high up in here in July. And on this wave count, I'm staying with a 1, 2, 3, 4 wave count down because this did overlap the ending point of 1 here. I think this was a truncated wave, fifth wave over here. And the overlap is very, very minuscule. I think it's like an eighth of a point or something like that. The old eighth of a point. It's like 12, 15 cents. So it's very, very minor. So I'm sticking with this count, looking for this to break. Again, we got a nice, pretty solid gap down on this. Looking for it to break that trend line. The next one is JP Morgan. JP Morgan's been one of the, a lot stronger than Bank of America and Citigroup since, last 10 years. This is an all-time high here, not a post-crisis high, not a, high since 2010. This is the all-time high for JP Morgan. So now I'm counting this as a 3-wave A back and a 3-wave B back up in here. We got a 5-wave move down for C. I'm thinking this is what I call a W in Elliott wave terminology, an A, B, C, W, and that it's a part of a more complex combined corrective move that's going on, because this looks like an X-type move, a 3-wave type of overlapping move in here, series of 3 waves. And so I'm looking for this, and we're getting divergence on this, I believe, just like on XLF. You can see we did not go to new highs on the RSI. We did not do it on the demand index. And take a look at this, and we did not do it here on the DI+. I hadn't actually looked at that. So there's no confirmation of this move by all 3 of the indicators that I track in here. So I'm looking for this to pull down also. So we'll see whether or not the financials start to more significantly weaken in here, break this little uptrend line that's been in place since February, and start to break down. All right, that's the picture for today. By the way, hey, hit the button up above if you're not haven't subscribed on YouTube. Subscribe, and hit the like button down below or here on YouTube. Hit the thumbs up, and share the video. Remember to share the video, and if you're not watching this on my website, make sure you go over and visit the website and check it out. All right, everyone, have a great weekend. We'll talk to you on the next video.